Hello everybody. So today I am recording this session on 10th of April. Tomorrow, which is 11th of April, is a quarterly result day for TCS. So it is an interesting day. Hopefully I would be able to cover that as well. So what are we doing today? We are doing something very interesting and you all guys like it, I know it. So we are analyzing the performance of our very loved CEO, Mr. Rajesh Gopinathan of TCS. Do remember, Rajesh Gopinathan just completed 5 years in office as TCS CEO. Before him, N. Chandra was the CEO of Tata TCS, who later became the chairman of Tata Sons. So that means based on the performance of N. Chandra, he was rewarded and became the Tata Sons chairman, while Rajesh Gopinathan is looking after the TCS. So how is the TCS? How is the performance of Rajesh Gopinathan in last 5 years? We must analyze that one because we are getting some interesting data points and we should look after that. And this becomes even interesting because recently Rajesh Gopinathan set a target of about $50 billion company in terms of revenue by 2030. So that means he expects TCS to clock annual revenue of about $50 billion by 2030. At the moment, TCS is little less than $25 billion, and to reach $50 billion, TCS has to cover a lot of ground for next 8-9 years. And we are very keen to see TCS at that place. So let us understand some of the data points. We will analyze these one by one, and I'll also give you my take on his performance at the end. So let us begin. To start off with, I have some key data points. So I thought about how should we analyze the performance of Rajesh Gopinathan, who is very down to earth. TCS has been very stable company, so it becomes difficult to find a lot of KPIs in that scenario. But we are here with a lot of KPIs. So here you will see I have the data from 2012 to 2017 2018 period, sorry, 2014 to 2018 period, when N. Chandra was the CEO, and after that Rajesh Gopinathan took over. So I have both data. So what I am trying to do here is TCS performance before N. Chandra and before Rajesh Gopinathan, and TCS performance after Rajesh Gopinathan. So if Rajesh Gopinathan exceeds the expectations or the performance of his predecessor, that means he has done really remarkably well job. So good job. So let us understand the performance aspect. If we look at the revenue trend during N. Chandra's time, you will see the compound annual growth rate was 14.3% for revenues. So from 81,000 crores in crores, that would be around, I think, 13 or 14 billion dollars in revenue. TCS grew about 123,000 crore rupees. So it will be difficult because it will be difficult to convert that into dollars. We will have to factor in the exchange rate of that time, but let us depend on the local currency, which is the rupee. What's interesting is the compound annual growth is 14.3% during that time. If we see the operating margin, you will see from 29% in FY14, the company was coming down gradually to about 25% or little less than 25%. So no complaint on that. And in terms of employee headcount, by FY18, okay, the company was almost about 400,000 people company. And if we translate the same performance in terms of their earning per share, so the earning per share was about 13.6% over last 5 years, which is compounded growth. Now very interesting statistics we have is about cash usage. So before 2018, if you look at the last 5 year data, they return to the shareholder was about 61% of the cash they returned to the shareholder. 27% was invested in lot of activities, either loan or probably they would have invested on some other forms, and they had done a capex investment. So capex investment was about 10%. So what that indicates is lot of the money and revenue they were getting in, about 10% of that was being spent on the new asset building things. So capex investment is that. So capex investment translates into revenue in the future. So these are some of the figures during 2014 to 2018 period. Now if we look at the trend between 2018 to 2022, last 5 year, the revenue trend has come down by to about 88.6%, okay, from 14.3% or 14.6% we just saw here. Let's go back a little bit. So from 14.3% we reached about, or TCS reached about 8.6%. So it's a huge decline in their revenue growth. Okay, their revenue is growing much slower. If you look at the operating profit trend, it seems like the operating profit after remaining quite about 24-25%, it's stabilizing at that level. So though the company's revenues are growing slowly, but their operating margin, that means the net profit on every resource after excluding all the revenues, all the expenses, after including all the expenses, seems they are doing fine. I'm not getting into client metrics. Ultimately client metrics, whether it is 100 million, 50 million or 5 million client, they all convert into revenue. So in a way we are studying the revenue. So in terms of employee metrics, so the company by FY21 was about almost about I think 488,000 people. Now they have gone above 525,000 people. That means about 150,000 net addition in last 5 years. Now if you look at the earning per share, the compound growth was 7.7%, and if you see, we saw that about 13.6. that means the shareholders money has also not grown that well in last 5 years. So if we are translating that in revenue terms, okay, and if we have to see the cash usage, because there my particular special interest in this area, if you see 82.6% of the money out of the revenue they return back to their shareholders. What that indicates is lot of that money was cut down from their other areas like capex investment, like in other capex or their investment in other areas. You can see that the capex portion goes down to about 7.5%, which was about, what was that, which was about cash usage. If you look at here, capex investment was 10.3%, which is 7.7%. now 7.5%, and the 9.7% is invested funds. That means TCS, if anything changed in TCS, these two important criteria. TCS used to invest about 27% of their revenue. Now they are only investing about 9% of that, and that's probably causing some distress in their share market performance. So we will come to that as well. So shareholder getting money back is always good, that's not a problem, but when you have money you should invest into your asset building. Future capex investment leads to new set of new avenues of your income in the longer run. So that is always a good side. That also states one more thing, that the company has been relying heavily in in-house capabilities. They have not acquired a lot of companies outside from the market. Okay, that is very very different from how TCS how Accenture has done over last 3-4 years. So they have grown massively in last 3-4 years. So this is the overall KPI of last 5 year in and Chandra's time versus Gopinathan's time. So if you see, probably while the revenues have grown fine, that's not a problem. The area of concern is capital investment is very low, which is rewarding in long term. So now we should talk about their own target, which is about $50 billion of revenue by 2030. So which is again, as per the reports, it is about 8.9% compound annual growth. But if I do the math myself, and I have this compound annual growth, the growth rate calculator, to reach from 25 billion to about 50 billion in about 8 years, the company has to grow at 9.5%. And that's huge number. The company which is growing, let me tell you, when Rajesh Gopinathan came in at the helm at TCS was about $8 billion company, and it is almost about $25 billion company, and it has already spent 5 years. So that means, as per my calculation, okay, the TCS compound annual growth is about 6.79% over last 5 years. And from 6.79%, and Rajesh Gopinathan is setting a very high aim of $50 billion, which requires a growth of 9% for next 7-8 years. That's a very big task. That means 1.5 times from current growth rate, without changing the strategy. Though they are also putting in some new structure in the company, and we will see, probably that will play out, and they have some confidence. They also want to be little aggressive on the consulting side, okay, the management consulting side. Probably that is why they are a bit more confident. But looking at the trend, it seems a difficult task. I'm pretty sure about that. So now it is time to see if the investor got richer in TCS in last 5 years. So I have the data for last 5 years. So I'm trying to compare TCS with Infosys, not with Accenture, because TCS and Infosys are Indian companies. Therefore, they are listed in India, and lot of developing market macroeconomics play out. That's why we need to do that kind of comparison, not with Accenture, which is listed in the US stock market. So what's interesting here is, while TCS with this blue one has grown by about decently, but Infosys share market performance has been better than TCS. So these are the these are the latest figures of their performance. So 220% over last 5 years, 297, that means about 300% in last same period, while the Nifty base index has grown up about 100%. So they all beat the market by a big margin, which is very good. So I would not say TCS performance was bad. It was a fine performance, and TCS has been priced highly, so it grows slowly. That's not a big challenge. So in terms of market performance, the company's performance is fine. However, having said that, there is a caveat, and the caveat is, if you see, in September of 2021, TCS crossed the market cap of about $200 billion, and in last 6-7 months, this capital market, the market cap of TCS has come down by about 25 billion or 30 billion dollars. So if we see current market trend, market cap of TCS, so let me just show you. So it's about 13.49 lakh crore, which is about 1.7%, $170 billion. We need to dig down a little bit more into that story, why the market cap from $200 billion, it has come down to about $170 billion. And if we see the last 1 year performance of Infosys, you will see it was 27.66%, while if we see the same for TCS, if the 1 year time frame, their performance was about 13.66%. Please do remember, in the same period of time, they have done one extra share buyback program which they did last quarter, and they did a massive share buyback at a very at I think 25% premium rate of about 4500 from current market. If we exclude that one, probably the performance is even bad. So market is understanding the problem and trying to flag a problem for long term. That is a worrying sign. While TCS CEO has got his tenure renewed for next 5 years, but market is closely watching this space, the performance space. So all in all, how was the performance of TCS CEO? There are few hits and few misses. For example, in last 5 years, revenue growth has slowed, and operating margins are stable. That means company is as profitable as it was 5 years ago. The cash usage has not been very optimum. That is worrying sign. Company has not invested in capex. That's again not a good sign. 50 billion target seems to be a bit far-fetched. That's something to watch out for. And if you see one more consideration, probably they are relying too much on cheap labor aspect. The more people you hire and they are being built, the company gets money on those build resources. But ultimately, a company cannot just rely on the human capital. The company has to rely on their core competency. They will have to build those core competency and become profitable irrespective of human power. Having said that, some of the very positive for the company in last 5 years are, so their market cap has doubled. So in a way, that's a very good sign for all investors, despite those not so good data points. Employee headcount has gone above 500,000 people. That's again very positive sign. And still the company is a magnet for new talent. A lot of people want to join TCS even at some discounted rate. Okay, so we saw some positives, we saw some pros and cons now, and based on that, how would you want to evaluate Mr. Rajesh Gopinathan's performance? So to me, if I will have to rate his performance, he's not done excellent job, but he has done fine job. Okay, the challenge will be next 5 years, because we have been seeing Accenture and Infosys are turning real good in last couple of years. Accenture is about to cross $60 billion in revenue, when we saw about 6 months ago or 7 months ago, the company, that means the market cap of TCS, was higher than Accenture at one point of time. So unless we see some new initiative by the company, it will be difficult to be at that premium for very long. Infosys as an Indian brand is always very favorite of the investor. That means investors are finding a new home to Infosys. That makes Infosys much better prospect than TCS for long-term investor. So that's the story. How would we rate Rajesh Gopinathan's performance? This is average performance of Mr. Rajesh Gopinathan. Out of 10, I would score probably 4.5 or 5. That is max I will give him. That's probably not a good number to see, but let's hope things turn different way for TCS and it again gets its mojo back. With some data points again in future, probably I'll come back with some another similar analysis. Probably I should do an analysis of Infosys CEO. Write me down if you want that analysis. I'll come back soon. Till that time, take care and goodbye.